Today I've got major update on Ehang Holdings, ticker symbol EH. Ehang is a Chinese company making headlines in the world of autonomous air vehicles. In this video, I will break down the recent regulatory approval they just received. I will talk about how their financial performance and global expansion are shaping up for 2024, and then we will look at which big investors are buying in and what Wall Street analysts are saying about this stock. As always, this is not a financial advice. Make sure you do your own research before making any investment decision. So here's the big news. Yang is gearing up to launch commercial air taxi services by end of 2025. If everything goes accordingly to plan, they could be the first company in the world to offer something like this. This is a huge step forward in urban air mobility and positions China as a serious player in the next-gen aviation tech. The aircraft themselves are autonomous, futuristic looking, and built with short distance transport in mind. We're talking about tourism and quick trips in places like Southeast Asia and Latin America. They're not just cool looking, they're also cost effective, which makes them even more appealing in developing markets. Now let's talk about the numbers for a second. According to Guru Focus, the estimated fair value of Ehang stock is $81. That's over 450% about the current share price, which is about $14. Now, 10 analysts have given the average price target of $25, with some analysts going up to $32. The average brokerage rating is 1.8, and that puts Ehang in the outperform category, meaning analysts are expecting Ehang stock performance to be better than their peers in the near future. So while the stock is definitely volatile, the upside potential here is pretty massive, accordingly to what analysts says. In the fourth quarter of 2024, Ehang really surprised the market. Revenue jumped 190% year over year, hitting $22 million. Earnings per share came at negative 0.33, which might not sound great as of now, but it actually beat expectations because analysts expected that the earning per share is going to be around negative 0.83. Most importantly, the company posted its first positive adjusted net income, and cash from operations was finally positive, and that's a big deal. They're now aiming to hit GAAP profitability by the second half of 2025, and they've set a target of $120 million in revenue for this year. That's aggressive, but with the momentum they've just gained and the order backlog they have, it might happen. Now, Yang isn't just growing at home, they're growing globally. They recently secured regulatory approval from the Civil Aviation Administration of China, which clears the way for them to scale production in big way next year. They've already got a backlog of orders, not just in China, but internationally too. Plus, their supply chain doesn't rely on US parts, and that's super important, especially with the recent tariff changes on Chinese goods. They're also expanding into new markets like Asia and Europe through strategic partnerships, and that could unlock even more growth, especially in areas that are eager to low cost, efficient air mobility options. Now, institutional investors are clearly paying attention because recently, Vanguard increased their position in Ehang to over 1.6 million shares, valued at more than $26 million, and other major players like State Street, Better Bank, and SBI Securities have also added to their holdings. Now, when you see this kind of institutional interest, especially in such a small company and in their early stage of growth, it shows real confidence in the long term vision from those institutional investors. Now, one of the more recently came from the Dutch bank. Their analyst Edison Yu just upgraded Ehang from hold to buy, even though he slightly lowered their price target to $20. Now, the reason behind that he believes that China is building an entire eVTOL and urban air mobility ecosystem, kind of like how they led the EV revolution. Now, he's impressed with Ehang competitive pricing, their strong gross margin of over 60%, and their rapid revenue growth of nearly 290% year over year. Now, he expects more growth in 2025 as the company scales up and starts delivering on their commercial flight plans. Now, to sum things up, if we zoom out for a second, Ehang is close to major milestones. Commercial air taxis could be here by the end of the next year. They've shown huge growth in revenue, posted positive adjusted income, and are pushing toward profitability. They've got global expansion plans in motion, a clean supply chain, and strong institutional backing. And despite all that, the stock is still trading in the near low of 12 months, and that may be due to the recent sentiment in the overall market and Trump tariffs. On one side, there is a lot of potential, but there is a lot of risks, so it's all need to be taken into consideration. Thank you for watching this video. I hope you enjoyed, and I will see you in the next one.